the government is back up and open until January 30th. I think, maybe some casual onlookers would have assumed that would have been a good thing for the market. But the market has been pretty grumpy the past couple of days after a really nice run. The Dow and the NASDAQ were both kind of on a roll. The past few days of trading have been the exact opposite, and seemingly all at once. The NASDAQ was down, I want to say, 2.25% on Thursday. I open up today and it's down another point. Is there any connection there, or is it something else?
Look, what's going on in the markets today? It's all concentrated around AI stocks, right? So,
well, the last couple of days, it seems like anything to do with AI, or chip makers, etc. Really kind of,
There could be a number of stories, right? It could be the fact that, it's AI is a growth story. And if the economic growth story is in trouble, well, AI is going to take a hit. That's one potential reason. The other potential reason is rate cut hopes fading, right? Well, maybe the economy is strong and the Fed, right? Some people might think the economy is strong and the Fed's not going to cut. And so, if you think, AI needs rate cuts, to keep the exuberance going, then of course, you could see a potential that could result in a sell-off. There's also the bubble chatter that's rising, around AI, right? This idea that, look, maybe, there's been a period of euphoria and that the price of these assets largely exceeds their fundamental value. And no one wants to be left holding the bag. That's another potential story. So there's many stories right now.
Well, let me ask you this. Is AI just in and of itself? It's been hard for us to escape conversations about AI because AI is, it feels like it's moving very, very quickly. Maybe there's just this fascination with it that's driving AI in the headlines. I don't know that we've necessarily seen anything more than maybe the beginning of, automation, in workplaces, that you could attribute to AI. But the hype around AI, has that led to, these valuations that you're sort of hinting at that maybe just be overblown? Are we the victims of the hype around a new shiny thing?
I don't know if they're overblown, right? I really don't know. I think we're going to have to wait and see. Ultimately, it looks nice on paper, but the economic research tells us that unless you get a ton of adoption across, and I'm not just talking about like wide, but deep, you're not going to really see the full promise of AI being realized. Right now, you're not really seeing it. It's seeing this massive impact on the economy. Right at the macro level, it's just not there yet. And so, yeah. And then there's the other question is, are we investing in the right things? Right? If we need to be investing in other things, if capital needs to flow to places where it's more valuable, in order to support AI investments, these initial AI investments, then maybe a sell-off is necessary to go and actually build up the other complementary pieces, of the puzzle. Right. And so Yeah, I mean, that could very well be what's also playing out here, like this, money being reallocated.
Yeah.
Uh,
Well, there's certainly more diversification, in the Dow than there is in the Nasdaq, right? In terms of the kind of companies that are there. The Nasdaq is almost, not to say exclusively tech companies, but I mean, it is kind of, it's the home for where, tech companies are listed. Why would the Dow, which, would be somewhat, more immune to, changing attitudes around technology or fears around technology or concerns that AI might be just, too much and, or overvalued, that the prices on the stocks in that.
I mean, ultimately, it's just these companies, right? Apple, Nvidia, Microsoft, Amazon, Tesla, Alphabet, Meta. 35%, roughly 35%, I think, of the S&P 500. I can't remember what the number is. So that's really it. But perhaps the investments need to flow to those companies that need to be able to adopt all of these new technologies, right? And if that's true, then you should see this rotation out of the magnificent seven into these other companies.
Into other stuff. Yeah.
That's right.
We were talking, in the previous episode about, a Fed rate decision coming in December. What's your feeling on that? I mean, it just at this point, and how do you think that's going to influence the market? I have not seen, a whole lot in terms of sentiment being offered. You follow it much more closely than I do in terms of Fed governors and what they have to say. Do you anticipate that we're going to see one more cut here before the end of the year?
Well, I mean, look, the good news is we're probably going to get some employment data, right? Did the White House come back and say, we'll get some employment data and some inflation data?
Well, certainly we're going to get some paper that we haven't had.
I think if we could get an employment report before the decision, the December decision, that's really going to be helpful. Because here's what I anticipate. I anticipate employment growth is stalled, very low. I anticipate the unemployment rate is ticking up slightly, not a lot, but slightly. Mm-hmm. And if that trend continues, right? If we can see that continuing, I think that will almost guarantee a rate cut in December.
Mm-hmm. So let me ask,
regardless of what inflation is doing.
All right. Last question. And this is to the economist who relies on this data. How is it, or how will the federal government bridge the gap on data from the period, inclusive of the shutdown, from those 43 days, or will it?
I don't think it will. I mean, I think you have to go and start collection for November, so we can get the November jobs report in early December. So yeah, that's what I think is going to happen. Now, I don't know. I'm seeing headlines that there might be a report coming out. And so I haven't checked, but we'll see. I think we should try to get November data out before the Fed decision day in December, which, by the way, when is the Fed decision day?
I'm not sure of that. I would assume it would land before Christmas.
Yeah. Yeah, that's right. I mean, hopefully it's later in the month. So it's 9th and 10th. All right. So hopefully we can get the November jobs report and the November CPI out before the next Fed decision.
All right, well, we'll keep an eye on that. And obviously we're going to be paying attention to what's happening, broadly across U.S. economics, but, and we'll check back in on the markets as well. For Orphe Divounguy, this has been Chris Krug. Subscribe to Every Economics wherever you get your podcasts. And make sure you listen to us each week on the Center Square Radio Hour.